This episode of Back to the Roots podcast is brought to you by Mercaris. Mercaris produces the most comprehensive, trusted market analysis for organic and non-GMO agriculture. Do you have farm gate prices? If so, Mercaris invites you to join our farmer network, contribute your prices, and get access to the best information to run your farming operations. Get started by visiting us at mercaris.com/farm_gate_survey. That's mercaris.com/farm_gate_survey. And thank you to Mercaris.
This episode is also brought to you by Byron Seeds. The folks at Byron Seeds believe organic requires a different perspective, plan, and approach. Organic isn't simply a different type of product or even a different way of farming. It's a different way of thinking, planning, and commitment. It's a different philosophy on how to feed the world. Many won't understand, but the people at Byron Seeds do. We're owned by organic dairy farmers. We not only have the product, but we plan, manage, and execute organic. We speak your language, we share your struggles, and we laud your successes. Organic isn't a way of doing business, it's a community. We learn from each other. We're in this together. We'd be glad to talk cropping plans, management systems on the road to profitability. We understand what you're trying to do. We're farmers just like you. Visit us at byronseeds.net or give us a call at 1-800-801-3596.
Hi, this is Ryan Koory, the Director of Economics here at Mercaris. I'm here with your monthly update on U.S. organic commodity markets. Starting off, looking at the situation with the U.S. organic livestock production. The month of December didn't really bring anything too new relative to what we've seen over the past year. In December, we saw federally inspected organic broiler slaughter reach about 4.2 million head, which is mostly flat with where it was last year and up a little bit from a slump off in November. The cage-free egg layer inventories were at 17.1 million head, which is up about 6% from where we were last year, which is consistent with a spike that we saw in production towards the end of summer this year. So we continue to see those numbers run pretty strong and pretty well above last year. And then the pace of organic fluid milk sales reached about 237 million pounds over October, which is up about 3% last year. And that's actually, a continuation of the trend that we saw really beginning with COVID this past year, where fluid milk sales escalated, and then we continue to see the organic fluid milk sales remain elevated as a result. It's unlikely that those elevated fluid milk sales numbers are relating into increased dairy cow inventories, at least not yet, but it is positive to see that those fluid milk sales numbers are remaining above where they were last year. Turning to take a quick look at imports. On the import side, there's not a whole lot of new news to talk about. We continue to see the pace of organic corn imports, both whole and cracked corns, trace below where they were last year. We saw in December the pace of organic cracked corn maritime imports was up about 70% year over year after a slump off in December. But overall, between cracked corn and whole corn, imports in December only reached about 30.7 metric tons, which was up a little bit from December, but it still keeps the year-to-date pace well below where we were last year. Looking at organic soybean imports, again, they remained sluggish in December. In total, if we look at the pace of organic soybean imports over the first 4 months of this year, we're only at about 76.4 thousand metric tons, which is down about 23% from where we were last year. The one thing that continues to be in opposition to corn and soybeans is the pace of organic soybean meal imports, and those continue to remain phenomenal. Really, if we look at the first 3 months of the soybean meal marketing year, which starts in October, so talking October, November, December, we've seen the level of organic soybean meal imports reach about 1,102,000 metric tons, which is up about 122% year over year. And one of the striking things, of course, when we talk about organic soybean meal imports, is that they're primarily sourced from India. In any given month or any given year, over the past several years, we get anywhere from about 80 to 90% of our organic soybean meal from India. And with that being the case, it was striking to see the USDA release a notification last week indicating that they were going to begin to discontinue their recognition of organic certification equivalency with India through the 80 EPA situation. Essentially what this means is 80 EPA was allowing for an equivalency agreement with organic certification in India, and anybody who was processing and producing and sending organic imports to the United States will now have to recertify through an NOP certified agency. And in addition to being certified with the NOP, they'll also have to be registered on the Organic Integrity Database. Really, by the beginning of March, this is supposed to begin with shipments from India arriving in the U.S., specifying increased levels of transparency in terms of the shipments with their country of origin and their shipping consignees. And then by July, any Indian organic exporter is supposed to have recertified with the USDA NOP or give up its certification standard.
Now, Ryan, with that equivalency agreement ending, I know we went through a somewhat similar situation when several years back Turkey had some, I believe it was just organic integrity concerns, and we haven't heard those kinds of conversations about India, at least not yet. So it sounds like this kind of somewhat came out of the blue. I know you'd be speculating here, but any indication of why that equivalency agreement would have ended?
Leading up to this, I had not really heard any strong conversation around concerns about imports from India, particularly within the organic sector. And, it's something that we've talked about an awful lot here, and I've spoken with people about several times over the past couple of years, that the reliance on U.S. markets for organic soybeans from India is striking. You consider the fact that India provides, like I said, 80 to 90% of our organic soy imports, and our organic soy imports account for about half of our supply, to actually no more like 2/3 of our organic soy supply. That means in any one time, India is providing anywhere from 1/4 to 1/3 of U.S. organic soy. So to assume that they would never come under increased scrutiny would maybe be a little bit naive. However, leading up to this, I had not heard any real deep discussion or persistent discussion around concerns about imports from India. I think it's great to see an increase in transparency, particularly with the fact that these operators who are located in India will have to be certified with NOP-accredited certifiers. I think that's going to add a lot of transparency, but it is interesting, and it does impact a substantial portion of the organic supply chain, particularly with regard to soybeans.
Well, like you said, it is good to see the NOP being proactive if this is just a protecting the supply chain situation, which is what it sounds like, at least at this point.
Yeah, absolutely. It's always good to see, increased steps in terms of creating transparency and regulation, for a market like organics that really relies on integrity and the security of the products that it's offering and its name. The name organic means something, and that's where organic gets its value. So it's always good to see those things being enforced. So turning to take a look at prices, as we start off the 2021, for January through the first week of ending January 9, the 2-week period, we've seen organic feed-grade corn prices actually rally just a little bit. That 2-week period, we saw the feed-grade corn price delivered to U.S. organic corn elevators average about $7.10 per bushel, which is up about 20 cents per bushel from the start of December. And it marks the 4th week in a row that we've seen our survey price come in above $7. One thing that we had talked about earlier was concerns with the size of the U.S. organic harvest this year potentially coming in and creating more downward pressure on price, particularly since we knew we were going to be looking at better yields and more acres. And the truth is we really haven't seen any evidence of that. Really beginning in August, when we saw organic corn prices come in somewhere around $6.50 per bushel, organic feed-grade corn prices have mostly plateaued. They've pretty well just continued to run between $6.50 and $7 per bushel. And, with January and the end of December, now starting to push above $7 per bushel. So the concerns that we had ahead of harvest, that harvest would come in and create a lot more bearish pressure, don't seem to have come to fruition, which is positive news, I believe, for the organic sector. Taking a look at wheat contracting continues to remain really quiet, as we've seen essentially since over the last half of last year. That 2-week period ending January 9, we saw the price for organic feed-grade wheat delivered to U.S. organic grain elevators came in at about $7 per bushel, which is pretty in par with what we've seen really over the whole third quarter of 2020, and mostly even with what we're seeing in the organic feed-grade corn markets. And then finally, looking at organic feed-grade soybeans, the prices continue to remain mostly stable, with the price for U.S. feed-grade organic soybeans delivered to Corn Belt organic elevators coming in at about $19.90 per bushel for the 2-week period ending January 5th. And it's up just a little bit from where we saw at the start of December, but it's well within that $19 to $20 range that we continue to talk about soybeans holding, really since the start of last year.
Now back to the corn market, I'm wondering if some of that floor at that $7 range might also be partially in part due to the conventional corn price rallying here recently, and then even more so impacting organic corn supplies potentially is the non-GMO pricing. One of the contacts I have in the grain industry right now is making contingency plans to actually use organic corn in non-GMO rations because the price has climbed so significantly, and it sounds like supply, at least at this feed mill, is, as far as being able to find non-GMO corn, has been fairly tight. And if they're talking about $5.60 for non-GMO corn right now, and they're paying $6.50 for organic corn and selling for, I think, around $7.25. So they are making plans for that, and I just wanted to get your input on, or I guess again we're back to speculating, but with that price being where it's at, there's going to be a lot of farmers that will consider either not transitioning, not continuing with an organic transition, or just pulling out entirely if they see that non-GMO market actually outpace organic, and if that trend continues.
Yeah, and I don't think I'd be saying anything too controversial if I mentioned the fact that an amount of the growth that we've seen within the organic industry over the past several years has been motivated by the fact that conventional commodity prices were essentially struggling, basically from about 2016, 2017, maybe even going back as far as 2015, up until really this year. And now that we're starting to see those commodity prices start to rally and move up, we're starting to see organic or conventional corn rather remain firmly above $4 per bushel. While we're seeing conventional organic corn start to dip, it's not surprising that the farmers who are converting and who are motivated for organics purely from a profit perspective may be reconsidering their decisions. One thing we're in the process of now is finalizing our acreage estimates for the 2020 year. And part of that process is reviewing how many new organic farms there were. And so that's definitely something we're currently reviewing. I wish I had some early numbers to share with you, but we're not quite that far into the process yet. But at the end of the day, and I think maybe kind of coming around to the question here is, at what point do you start to see conventional prices put pressure on, the willingness for farmers to continue to farm organic? And I do think that there will be a section of the population, like I said, that's driven by the profitability, that will make that decision. because organic farming does require more time, and it requires a higher amount of effort in terms of your farm management decisions. And those times and those efforts, they're not free. They come at a cost. They come at a cost to the farmer. And some farmers will continue to remain organic because they believe in organic farming, and those costs are, something that they're willing to eat simply because it brings them they feel a benefit of organic farming beyond just the revenue. But yeah, we're hitting one of those situations where, and we really haven't seen one of these since the last time there was a recession where organic and conventional corn prices kind of converged for a short period of time. We're not quite there yet. We're still looking at something like a $2 to $3 per bushel premium for organic over conventional. But, we were talking $6 to $8 just a few years ago. So, yeah, that changes the math. That changes the economics and could definitely change some of the motivation behind growth or retraction in the number of organic farms.
Well, and as we've talked about on this market report before, the organic corn price is pretty heavily driven by domestic production, and it's the opposite for soybeans. But if domestic production goes down, obviously there's going to be a impact to prices in the short term. I guess the question for you would be, what is the usual lag time between seeing conventional prices rise and then usually organic tends to follow eventually, but I don't know if you've had any historical trends on how long that takes.
Yeah, and that one's so hard to say usually because the last time we saw anything like this was over 10 years ago, and it came on the heels of a global recession, and it came at a time when organics were really, they were a much smaller industry than they are now. They were just starting to take off. So the conditions that caused this the last time were so different than what's going on now. It's hard to draw parallels between the two. What I would say, and I continue to say, is the leading indicator would be people who are in the process of transitioning. Do they give up that process and just decide to put in a conventional crop this year because it's not worth the effort? That's the first thing to watch. And then the people who are new to the industry, people who've only been certified for a year or two, do they start to give up? Those would be the leading indicators. And absolutely, this year, watching the number of new people or people who apply for new organic certification and who begin that transitioning process, does that begin to go up, or do we see that drop substantially? That's going to be a very important thing and a valuable leading indicator in terms of how the organic industry is responding to this squeezing of the margin between conventional and organic.
Definitely something we'll be watching. That'll be a good short-term indicator, those number of new certs that come into the industry. And another short-term thing we'll be watching, if this will be something that happens industry-wide, in particular with that non-GMO pricing. If that continues to climb and eat into organic corn inventories, there might be an impact quicker than we might expect. But again, that's all back to speculation again.
Yeah, indeed. And if we look at some of the things we talked about before for what we were speculating for this marketing year, what's the pace of imports going to do? What's harvest going to be? Are we going to see more bearish pressure? A lot of those fears we haven't seen come to fruition, right? We are talking about an organic corn market that definitely looks like it found a floor. And the pace of imports, it continues to decline, frankly. And I think the lower prices are a part of that. The motivation to source from foreign markets is reduced whenever domestic prices are lower and domestic supply is easier to access. And so, the risk of prices pushing much lower, I would say, is pretty nil right now. But that only gets you so far, right? Surviving is not the same as thriving. Just because prices aren't falling anymore doesn't mean we're really ready to or in a position to see organic continue to grow. And I've mentioned this before, but really what you need there is consumer demand to continue to grow. If you want to grow more organic food in the United States, you need people to eat more organic food, or you'll wind up back in a situation where you are now, where supply starts to creep up on demand and it starts to put downward pressure on prices.
Absolutely. And there's always going to be those short-term ups and downs, just as new acres get added, and if there's a bumper crop of corn or whatever the market conditions may provide us, but there's always going to be those ups and downs. But I do think long term we are seeing that consumer shift towards more organic. Organic is continuing to grow, so I hope farmers that are looking at that decision of whether or not to continue on with transition, I hope they take a good long hard look and continue to listen to us, if I might put a shameless plug there. But yeah, I think this is all really interesting to continue to watch. There's always these, I guess from our standpoint, we're not the ones that are out there farming and making a living off of selling corn, but it's fun to watch these markets ups and downs when you're from the outside looking in, I guess I should say. And Ryan, I really appreciate the time today, and hope we can come back with a little bit more clarity next month on what's going on here, and continue to help growers out. So really appreciate it.
Absolutely, Brian. It's been a pleasure talking to you.